Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we've been talking about investing this morning. This has been a rough year. We've already in 2016, in the first approximately 6 weeks of the year, we've seen the stock markets down over 10%. This is, that's in just the first 6 weeks, right? 6-7 weeks of the year. So we know this is one of the worst start, or the worst start, in fact, in the stock market history. One of the things when it comes to your own finances that I really want you to take away from the show, both this morning, I've tried to show you things that I hope you've gotten some benefit from. It's to let you know there are other ways, okay? If you've got a 401k, and when we do the investment analysis for new clients coming in, one of the things we do is we look at your 401k and we help you with asset allocation on your 401k. It's about digging down into what you currently have, and so we can give you shine a light, if you will, in there to see what's in those mutual funds, as an example. I've talked about bond mutual funds as one of the areas. One of the reasons I believe that the negative correlation, okay, between stocks and bonds has shrunk so much, one of the reasons for that is high yield bonds, and it has to do with the quality of the bonds. Even in bond funds that you would think are very safe, when you dig down, when I take a Morningstar analysis and I look at the bond holdings, I'm seeing bond maturities that are 20, 30 years into the future. Okay, those long-term bonds are going to be extremely volatile as interest rates rise. Okay, the next part has to do with the quality of the bonds. Even if we didn't have that, we've got junk bonds in there. These are, double B and lower rated bonds. Some of them C rated, some of them unrated bonds in there where they're seeking this higher yield to drive a better return for the investor, but they're adding a lot more risk than traditionally you would see in a bond fund. So this is one of the problems that we have when we're looking at our investments, okay, is an understanding. Do you really know what's in there even? What's in that basket? Are you just, well, that looked good, or the historicals look good, and you're not really digging into it? Because here's the other thing about mutual funds. The money managers can change those stocks and bonds, right? They can say, well, I'm going this way now, but tomorrow I'm going to do that differently. So one of the areas that we have to be concerned about is understanding what's in your portfolio, whether it's in your 401k, your 403b, whatever it is, it's making sure you know what you have. All right, so take advantage and dig down. This is the time to look. This is a great time, in fact, to do a checkup. Hope you got a lot out of this morning. Join me here each and every week on the Retirement Report.